Hello and welcome, friends, fellow traders, and investors. My name is Lloyd Logan Boucher from On Point Stocks and Options Trading. You can all call me Logan, and this is your weekend market prep video. Well, what an interesting week. We've seen the SPX and the NASDAQ fall into a negative trend, breaking and closing below the 50 moving average. Now, this is kind of interesting because even though we did break below the pivot low and create that defined two-leg pull retracement, we never held down there. We still pushed up just enough to get back up above the prior week's low. And that's an important signal right there. That means this may only end up a pullback and not necessarily the beginning of a downtrend. Monday, we'll find out for sure, or probably more so Sunday in the futures markets. But we did make a lower low and are now closed below the 50 moving average. Now, it's not unheard of for that to happen. It has done it in the past, just not necessarily in this last run up that we've had. But two-leg pullbacks are normal. And as I discussed in a prior video, I wanted to pull out the difference between what we call a trend continuation and a trend potential reversal. In the trend continuation, a two-leg pullback, one leg, two leg, can end with a higher pivot low than the prior pivot low, thus continuing the uptrend. In this example, we talked about how if we had broken and closed below the pivot low over here, that would have signified far more bearish kind of a signal. Then we had it. This pullback actually did signal a more bearish signal, but did not close below that pivot low. So this is an interesting observation that we got to keep an eye on because it is very relevant. In fact, none of the indexes actually closed below the prior pivot low or the prior week's low, meaning technically it did wick below there, but it isn't full-blown downtrend just yet. Take a quick look at the NDX, the NASDAQ. You can see this one actually did wick even deeper below than the last one, but its close, well, it was kind of right on the money. You might say it's down there by just a tick or two. Yeah, maybe it is by a couple ticks just below, but so marginal, it's so close. So our one leg, our two leg pullback, and yeah, just a couple ticks actually, maybe below. So maybe a little bit more weakness in tech sector than the other sectors. First time breaking below that 50 in a long period of time. And what that means is we're now going to have resistance coming from that 50 and from that 21 EMA that are now overhead. So be aware. We discussed this when it was down here and it first test on the 50. We said if that 21 turns on as the algo kicks on and becomes a selling tool, we're going to see price go lower. And that's exactly what happened in two separate occasions now, showing that there is viable selling happening here. We may be entering into a downtrend, at least in the tech sector and the sectors that are stronger in the NASDAQ. And the SPY is still holding just a little bit stronger, but Monday and Tuesday will really tell the toll. Take a look at the Dow Jones. Dow Jones is holding a little stronger, but they recently did just rebalance to try and put some stronger stocks into the Dow Jones. And, that's one of the beautiful things about the Dow. They just pull stocks out that are going down and put stocks in that are going up. So can you really say it's right? But it doesn't matter. If you're trading the chart, that's just how it works. So the Dow Jones has held below last week's pivot low, and it's still holding above the 50. Although we did have a bearish finish at the end of the day, it is still looking like it's in the context of an uptrend, simply consolidating. We don't yet have confirmation to the downside. And the same thing on the Russell. The Russell has a one-leg pullback, and it started to begin the two-leg, but it then finished off with some buying off that 50 moving average. Now, this is what can happen. We've seen the Russell here do a 1-2 kind of pullback with just that one candle in between. And then it turned around and rallied to a new high and is now pulling back. It looks like it's setting up for a new high. We haven't had that happen yet. Obviously, this big bullish candle really kind of gave a nice signal, got us back above the 50, closed above the 21 moving average was turned off, rallied above the 21. It's still not on yet, but the 50 clearly is, as it did buy back at the end of the day. So we'll see if this ends up holding or if the rest of the indexes drag the Russell down along with it. And we'll keep an eye on these. So the index comparison chart, we can see the Nasdaq is still the leader in strength in the indexes. It's actually had a deeper correction than the others. It's down 18. It's up only 18.7% on the year. I mean, only 18.7% on the year. I mean, who in their right mind would not believe that this thing was going to correct if it's up? Because it was up 30 some odd percent. Got to remember, hedge fund managers and big institutional investors that are managing monster portfolios, their average target is 10 to 12% per year. If they're up at 20, 25, 30%, they're going to take profits, especially before an election. And so, for that reason, that does give me fear that this market will continue going lower because any big institutional trader who's been riding this market up is going to want to take money off the table prior to a controversial election like this one we're having right now. And, I just cannot wait for the debates. This is going to be prime time. Uh, you know, this is going to be like really good TV. I think. It's entertainment for me. I don't watch TV, but that will be entertainment. All right, so SPX. And also, I want to learn what their policies are, what they're going to say they're going to do, but probably not do. All right, we see this SPY here up only 1.89%. Now it's almost flat on the year. So SPY really pulled back. The Dow down 4.2% now, and the NASDAQ, the Russell down 7.8% on the year. So pretty tough year for the small caps. All right, so looking at our Excel spreadsheet here, our Excel sector ETFs, we can see right here that the tech sector, consumer discretionary sector is actually pulling back. Well, and that's kind of expected because it's kind of pairing up with tech. It's pulling back as well. A lot of discretionary products are tech products. And so they're both pulling back and probably suffering the worst drawdowns aside from the energy market. Still above the 50 moving average and still holding, although the tech sector is below now, just like the NASDAQ. But these two sectors have been the strongest. And I wanted to point something out here, a little lesson for everybody. Pay special attention to this type of a market when you see this happen. Okay. This is, I've explained this in class a million times, and I'm going to explain it again. This is called a blow off, or what we call an exhaustion move in a market. A nice consistent trend trailing the moving averages and following the trend lines going up. This is the best type of market to be in always. You can always rely on buying those pullbacks. But then when you get an expanded range move that forces novice traders to chase price up with gapping up days that hold and gapping up days that hold and gapping up days that hold are almost, I mean, I don't even know if I can remember a time when they are not, followed by some form of serious correction that wipes out the entire move. You can see it right here. We got extended in the move, gapped up. Like who was buying it on this day? And then boom, the next day, gap down. And if they didn't want to take that stop loss because it was too big for them, they suffered a monster loss and may have gotten a margin call before they got out. Or if they held it, they would have made it back. But what happens if it's the time they say, you know what, last time I held it and it made it back? I just do it again. I made it back and then, I did it here again and it gapped down and I made it back. So I'll just do it again. And now they're down here. And what if this ends up being the next, you know, 1929 or the next 2007 or 8, and their account draws to such an amount that their brokers are telling them you got to mortgage your house and put more money in or we're going to close your trade down. You're going to lose 80% of your account. So this is not worth this, okay? This move here is not worth suffering what could potentially be the massive loss. Always watch for those exhaustion moves. Those exhaustion moves are blow-off moves and are followed by series corrective days. All right, so let's continue on. Sorry about the rant. And that's the tech sector. So same thing we've seen here happen in the consumer discretionary sector. Now over on the financial sector, this thing's been doing nothing but going sideways, just chopping like nothing's happening in finance. You can see in the consumer staple sector, it was actually working quite nicely, just a beautiful trend. Then it got extended. We had that gap up and a serious run up, and what followed the next day? Massive engulfing pattern and a two-leg pullback, two-leg retracement, and potentially beginning of a downtrend. We see the same thing over here in XLU, kind of consolidating and working into this tighter and tighter and tighter wedge. Hasn't broken out yet. Which way will it go? I guess we'll find out. You see in healthcare sector, just consolidating once again. Healthcare sector still going sideways. Now over here on the energy sector, this has gone into a clear downtrend, but now it's testing its trend line. So we'll see if maybe the energy sector is going to catch a bid. It is $33 a barrel for oil currently, and unemployment is been ticking down. So that means more people are going to be traveling to and from work, probably more people moving around. So maybe oil energy sector takes a bid because most frackers can't operate at this price level for oil. and it can't sell oil at this price level and remain operational. It's below their operating costs. So it's really too cheap for oil at this price right here. Basic materials still in a nice uptrend. That last trading day did not look very good, but basic materials is still looking fantastic. And I've been looking at FCX, which was one of our picks, which never got triggered, and it's still looking strong. But when we look at Alcoa, it's in a full-on downtrend. So it's kind of mixed bag with basic materials as to which companies. It's really, you got to be a stock picker to pick the right company on this one. And XLI, the industrial sector, again, still looking strong and holding. It hasn't yet broken beyond its prior pivot high, but it is still looking strong. The two strongest sectors in the market right now, both industrial and basic materials. All right, before we go any further, if I could ask you all a huge favor, and if you think this video is useful, if you like these videos, please click the like button for me. And the thumbs up button. I really appreciate that. And if you haven't already, you're welcome to subscribe to the channel and click that bell icon so we send notifications to you whenever we release a new video. I'd greatly appreciate it. Thank you very much for your support. It really is a big help, and it really helps our channel grow, which is really an encouraging thing to do these videos. So thank you very much for your support, everybody. Now let's take a quick look at economic reports here for the week coming up. We see we got trade good balance, wholesale inventories. We've got consumer confidence coming up on Tuesday. Nothing on Monday. Nothing too major till Wednesday. Wednesday we have non-farm employment numbers coming out. So ADP non-farm employment numbers. We're going to have GDP, and look at the GDP. My God, they're expecting minus 31.7 in GDP in the United States. That is unbelievable. I mean, when we look at U.S. numbers here in GDP, consecutive quarters of negative 30% GDP. I don't even, how long is that sustainable? That's incredible. The government's going to go bankrupt. I don't know how they're going to do it. They're just going to need to keep borrowing more and more money. So we're right now running on our fifth quarter and pushing on six of negative GDPs when coming out of one of the best growth cycles in the United States history, in terms of just consistent growth in GDP quarter over quarter over quarter over quarter. It really is disappointing to see this coronavirus thing is really devastating the U.S. economy. Now in Canada, GDP a little bit less severe. We've had two negative quarters in a row, some pretty serious, but then two positive quarters. And prior to that, we've always can kind of break even. So we're kind of actually doing better now than we were. But I don't really trust this because I am a Canadian and that's my Canadian government. I don't trust Canadian government, just like most Americans probably don't trust the U.S. government. Actually, it's probably most people just don't trust U.S. government. Anyway, so that's just the way it works. Okay, pending home sales coming up also on the end of the day on Wednesday. It's not the end of the day, it's at 7 a.m. Pacific actually. But Thursday, job cuts are coming out. Challenger job cuts expecting 115,000 job cuts. We're going to have personal income and spending and personal earnings. Like this stuff is actually really big news, and it's important as to how the market can grow in terms of spending, personal spending, big numbers. Over here, we're going to see ISM manufacturing numbers coming out as well. On Friday, we're going to have the personal earnings coming out. Government payroll numbers are coming out, manufacturing payroll numbers coming out, and then the unemployment rate. So they're expecting another unemployment rate of 8.3, which is actually better than probably expected, I would say. If we look at the numbers we've had, consistent growth in unemployment was being like near record lows, not record lows, but very near, lows when you see full employment, 3.5, 3.6, and then it jumped up to 14, 13, 11, 10, and now it's at 8, and probably going to stay around that same number. Again, incredible numbers coming out of an amazing economic cycle. But the longer that expansionary cycle continues, the deeper the contraction when the contraction occurs. And this is a man-made contraction, and I just don't understand why I'm not privy to the information, but man, what a crazy outcome. And so that's the numbers and economic reports coming up for the week. Now let's take a quick peek at the chart picks that we had from last Sunday and Tuesday's video. So these are the favorite chart picks we had. So we're looking at Sunday right here, and we'll start off with STZ. So let me just quickly adjust this chart for you and maximize it. So STZ followed the pattern as expected, was coming into that triangle pattern. It's been in this really nice trend consolidation, and it broke lower and then it built its way up and consolidated. And the breakout was always going to be a strong breakout of a consolidation like that. I got long this when it came down. It touched my buy area. It was a little higher than I would like, but it was actually just above the 8 moving average, showing that 8 moving average was on. I got long and I did get out half the position here and then another half the position over here. So I managed, I think, to average somewhere around 33% on the options on that particular trade. And I'm glad I got out because it ended up selling off along with the rest of the market. And sometimes you can't predict when the market's going to decide to go down. Disney, I also got into this trade. I definitely got in a day too early. I should have waited until the next day because it was so high up. But it did fail on me, and I did get out once it broke below that 20 moving average and turned out. So I was out of Disney. That trade did not work out at all the way anticipated. FCX did work out, but never gave a buy signal. It never came back to the buy area to give the white candle signal for the buy. And so it's moving, but unfortunately, that's without me. And again, Logitech here, it actually did signal a short entry, and it actually had some pretty decent profit there. And but it actually gapped up, and so it gapped up, and then it sold off, and then it just kind of hung out and not really doing a whole lot of anything. Logitech not really looking fantastic. Now, I want to be clear, guys. All this information I'm showing you, everything in this video, including these favorite charts, is all for educational purposes and not for any recommendation of trades of any sort. This is all just to teach and explain how I view charts, how I enter trades, and past results don't represent future results in any shape, way, or form. Okay, so I just want to make that clear. This is purely for education, folks. All right, so that was the 4 chart picks from last Sunday. So let's quickly take a look at chart picks for Tuesday. Now we got caught in the middle of a slide in the indexes, and unfortunately, when that happens, you're going to have some stopouts. If you're in trades, whether it's simulated or real or even hypothetical for educational purposes, some of those trades will fail. So, looking at the favorite charts that I picked out for last Tuesday, let's take a look at them. And I want to explain how I view entries and exits inside of these charts. Okay, so here we go. Now, looking at TNDM, is that correct? Yep, that's the right one. TNDM. So the entry opportunity began right over here where this thing actually opened up inside of the zone. It actually opened above the zone and then traded way above that, above the breakout. And that was the anticipated move. In the explanation as I was giving to you guys on Tuesday, I was expecting this thing as it had made that pivot high, made a higher low, held on the 50, and was pushing up against that pivot again. I was expecting that it was going to break up and go up. And that was a buy signal. I did not take the signal. It did push up and then it brutally failed that day. And I mean, if anybody had witnessed this sell off right to the end of the day, that is a signal to get out of the trade no matter what. You don't need it to hit a stop loss to get out of this candle. Okay, that's about as reversal shooting star candle as you're ever going to see. It failed on the breakout above that pivot high, closed back below, and it looked like it was going to continue going lower. So that trade would not have worked out. Next trade right here was ESPO. And so ESPO was a very similar pattern, although it had a deeper pullback. It did make a pivot high and it had broken above that pivot high. Now the entry opportunity was inside this box. And now using the confirmation rules that I've been explaining to you guys over the past videos would state that this would have to open up either in the box or just above the box, wick into the box, and then the candle's got to turn white. Now, as it happened, it did not do that. What it did instead was it gapped up. It did a 1 cent push up right at the open. That was just the volatility because of the spread. And then it immediately sold off the entire day and closed at the low of the candle. You got to pay attention to those kind of candles. That means something when it closes at the low. No buyers at all. The next day is 100% going to gap lower. In fact, on days like that, you're almost I'm not going to say this, but a trader could technically bet by buying puts on the end of the day, and they'd probably be okay the next day with a high probability of the time. Next morning, what did it do? It gapped lower, it pushed higher, came close to the box, never made it into the box, and that's okay because after a major push down like that or gap down, the run up, it was already tired. I would have needed to wait for one more day to see if it was going to come back in that box and continue. Well, what did it do the next day? It gapped up the next day, and it never pushed a cent higher. It gapped up and immediately turned into a black candle and sold off the entire day and then pushed up at the end. So once again, the entry rule protected from getting into this trade. This chart is clearly still messed up. It did not get the traction it was hoping for, and it has not yet decided whether it's going to go up or down. So there was no entry on this trade by the rules. eBay actually did work nicely. What did it do? It gapped outside of the box. It wicked back. It only just touched it, unfortunately, and then sold off. And it dropped down to the first target, gapped lower, traded much lower. There was a big potential for this trade. Now, the entry, obviously, let's set this up so everybody understands it, is not going to be at the touch of the box. You got to get the confirmation. And in a short setup, that means the entry would have been just as this candle turned back black. I was going to say red, but as it turned back black. And so there was the potential in there, 7.9%, more than enough. In an options trade, that would have been, I don't know, that could have been a lot, probably more like 24, 25 or so, depending on the contract pick. So that would have been more than enough of a move right there. So be aware that setup did work out for those that entered into that. And again, not suggesting people do it. I'm just simply saying for educational purposes. Now, of course, what do we have here? We have DRI, Dryden. Dryden, actually, I'd been looking for a pullback in Dryden. That's why the box was so much lower than the close on the Tuesday. And the next day, what did it do? It gapped up. It opened up actually, and then traded up and then sold off. The next day, it opened up, it traded up, and then it sold off. That never gave a signal. Now, on day three, it did give a signal to enter the trade, but it decided to sell off because the entire market is selling off. So if a market is correlating in any type of way and this is pulling back, remember, Dryden is relatively strong to the market right now. As the market is in a two-leg retracement, Dryden is in a uptrend and still just pulling back. So there's nothing wrong with this trade as it is. It just gave a confirmation and now it wants to go deeper. So this trade is still in play. Nothing wrong with that setup. All right, so that's last week's. Let's now take a look at what we have going forward. All right, so every now and then the market ends up and closes in a position where it becomes very difficult to find good trade setups, good chart setups. Got to change chart setups, okay? Again, for educational purposes. So I had some struggles. I probably looked through several hundred or more charts before I could find some that I felt really kind of looked like they had a chance. And so there are some short chart setups here, and there are some long chart setups. I try to find two of each because if the two-leg pullback in the indexes ends up being, a false break to the downside and continues up, a trader would want to have some exposure to the long side. If it ends up being a setup to the down and that two-leg pullback continues lower and turns into a full-on downtrend, a trader wouldn't want to have exposure to the short side. And so here's two shorts and two long setups for educational purposes for us to analyze here as a group. And let's take a look at these. So let's start off. All right, so beginning with AT&T, so ticker symbol T. Right now, this thing is looking like it's just setting up to break to the downside. As we can see, divergence inside of the moving averages, the 21 and the 8 are diverging, as well as the 50 and the 21. So momentum is beginning to carry to the downside in this particular trade. Sorry, let me zoom in a bit. There we go. Now, the way the box is set up is simply a conservative setup. It may, depending on how the futures end up, gap lower tomorrow. And if it does, then it's probably going to just drop and fall out. So might need to watch out for that. But I set this up because I think that the market may give a fake, well, I don't know what will happen. It could give a fake push up tomorrow and then end up selling off at the end of the day once it gets all those buyers to think, the bottom pickers to get in, and then it may just sell off because you can't deny, there is an election coming up, and Markets, people will deleverage before an election. You don't know when it's going to happen. Nobody knows for sure. The institutions are the only ones that know for sure, but the charts will tell us when it will happen. And we may try getting into short trades and it may fail. And that's part of the game. Every chart is a 50-50 outcome, guys. You buy it, it goes up, you make money. If it goes down, you lose. If you sell short, it goes down, you make money. If it goes up, you lose. You never know for sure what direction it's going to go. All we can do is work on stacking odds in our favor by entering in areas where we believe we're getting a low amount of risk for the potential amount of reward, and using confirmation entries so that we don't just blindly enter into a trade that's going completely against us. We have some sort of confirmation tool that tells us it's triggering that it's going to go in that particular direction. And by doing so, we're stacking the odds in our favor. So as we see right here that this has begun in a downtrend, it's still just only wick below that major pivot low. And that major pivot low, by the way, just happens to be right here, a pretty significant support point. So going to need to watch out for that in the future. Okay, so this needs to be broken, and if this breaks, it's probably going to be a pretty significant fall to the downside. There's not a huge amount of support anywhere really else on this chart, so we'll have to keep an eye out for that. But as it is, this is the area that I'm looking at, and I'm thinking if this thing can give a wick in here, or maybe a gap up, a wick up, retest at 21, and then sell off and break below these lows, this could end up being a very nice setup with a potential down to 27.19. And that's just a guesstimate based on the low of this pivot low here. Okay, let's take a look at a second one here. Tilray. So Tilray, what you're going to notice is a very similar setup to the one we just looked at, Tilray. So Tilray, I'll be more accurate here, is just beginning its nice downtrend, and we're beginning to see the diverging in the moving averages, which means momentum is picking up. Now, again, just like on AT&T, it did not break that pivot low on Sunday, and that's okay. That means it's positioned for a bit of a consolidation that could potentially break it lower. But unlike AT&T, this is not really a substantial, support point here. This is just basically a pivot low. So, based on how the market reacts, because it all comes down to the market. If the market decides that it's going to uh, resist its fake out to the downside and push up and continue going higher, this would not work. But if it decides instead that it's going to perhaps give that little wick up tomorrow or a slight gap up, maybe a slight push up, and then fall lower to continue and solidify that downtrend, this could end up in a very serious move to the downside because, again, there's no serious support anywhere on this chart till we get down to 335, 325 area. So that's a pretty significant return versus the risk. So that's the second pick for the day. It's Tilray. But again, always going to want to see that confirmation candle. And remember, in a short setup, the confirmation candle has to turn black. Need to see that wick in, wick up, candle turn black, and then sell short on a candle black. Again, all for education purposes here. Okay, Merck. Oh, Merck. Now, Merck is the long setup I have. And I got to tell you, this chart is impressive considering what's going on in the equities markets. Merck is still looking good. Even healthcare is not looking that great, but Merck is still looking pretty solid with some nice long tails on these candles. As the market was selling off, this thing was pushing up and pushing up. Now, again, I'm not 100% secure on the longs. I need to see some support from the market to say that the market that it's looking like some buyers are coming back in. But as it is, I put a buy box in this area. I think this is low risk setup. The one thing that fears me is this black candle here. Look at the volume on that candle. That is a high volume day. But then again, we had a high volume day on this candle, which was a buying candle. So it's anybody's guess on this one. Again, it's a 50-50 draw, but the reward will definitely be bigger than the risk if the trade goes against the trader. So in this setup, this is a long setup on Merck. And the last one, McDonald's. Now, McDonald's isn't set up per se. McDonald's is just one of those stocks that has been in this magnificent uptrend, not overly extended. It did have a lot of days in a row up here, but it hadn't extended too far, and it's now going into a corrective move. I wouldn't expect to find myself buying this thing on Monday. I would expect potentially a day or two to the downside, maybe then up. It really depends on if it holds on the 8 or if it decides to hold on the 21 moving average. And as you can see in the past, it's done both. It's held on the 8, it's held on the 21, held on the 8, held on the 8, held on the 8, held on the 21. So it really depends. Now, could it go down to the 50? It may, but I would be out long before that ever occurred. So again, with McDonald's, looking for that same type of pattern, perhaps another down day, perhaps a nice move up, and then that whole continuation like this. That would be the, basically same thing right here. Seeing this thing going up, seeing a down day, a push up, pull back, and then the big move. And that's what I would like to see happen with McDonald's here. Just be aware that we need to be I would not be entering in this thing just because it's posting. I'm trying to figure out how to draw a black candle here for you guys. All right, got it figured out. So be aware this is really what I'm expecting will probably happen. Something like this, and then of course perhaps a wick down, and then perhaps something like this, or even like this with a corrective move in between. Um, Now, for me and the way I do this, I would look for this to turn white before I enter into it. I'd be looking for that candle to turn white. And again, not in the first minute or two of the day, just the opening volatility. Kind of give that a bit of time to move. I'm okay if I get in a little bit higher, because that point there I got more confirmation. So that's what I'm looking at. That pullback, a little bit deeper pullback. We had a hard close at the end of the day on Friday. That was a negative close, likely going to break below the, or maybe even gap below the 8 moving average, in which case I would expect it to come down and then potentially do one of these. All right, and I believe that sums everything up for the day. So, folks, if I want to thank you all for watching, and everyone who took the time to subscribe and give the thumbs up. Thank you very much. Please leave a comment. If you get a chance, that would be great. If you have something you want to say, I really do appreciate it. I know I've been lacking on getting back to comments lately. It's hunting season and it's also harvesting season, and we do a lot of gardening and stuff. So we're harvesting everything out of the garden and keeping ourselves very busy. Aside from I'm teaching some online classes right now, and it's been very busy, but I'm still getting time to do these videos, and I really do appreciate your support. So thank you, everybody. Thanks so much. Have a safe week next week. Remember, cash is a position, and everything that I've been doing here for educational purposes, use it, learn it. Apply it in a simulated scenario so that you can test out my theories as to how I enter trades and how I analyze markets before you ever go and put any real money into the market. Make sure that you know your plan, your rules, and how you're going to manage your trades. Okay. Thank you very much, everybody, for your time, and have a great day.